And as earnings season continues, Usoro Essien, Head of Research at Vetiva, joins us now to focus on Nigeria's insurance sector. Thank you so much, Usoro, for joining us today. Maybe first of all, your perspective on the market. It's starting like really slow this second quarter, and I made the point yesterday that is this a sign of more of the same? Today we're seeing it down 1% again. What are your thoughts?
Yeah, so I think the market largely has been waiting for triggers, catalysts, as you may think, and that has not happened. Post-elections, we have seen a general bearish sentiment that has refused to leave the market, per se. So what you will see is a lot of bargain hunting when some stocks reach the oversold position, technicals, and you would see some investor interest on those counters. Obviously, fundamentally strong stocks, blue chip stocks. Yes, right. When they enter the oversold position, you see some buying. But the momentum that cascades across different sectors, we have not seen that.
Do you think this is all about, should I say, lack of insight into the government's economic policies moving forward now that the Buhari government has the mandate for a second term?
Yes, you could say that could be a factor, but on a broader picture, globally, there have been fears of growth. We do remember that we expected the US Fed to start their policy normalization, meaning hike rates back to the levels we saw pre the financial crisis. Yeah. That has not happened. The fears are that growth is weak and fragile, and some investors are harboring those fears and are probably sticking on emerging market counters that have less risk. In our market, there's more of a bias for fixed income instruments. You have seen that as long as those yields persist over the 10% levels, way above the developed markets, you see a lot of buying interest on those instruments. Yes.
All right, we'll see what happens, but let's now turn our attention to the insurance sector. And it's not one we discuss a lot because we have relatively small companies there. You can really count on one finger how many companies are worth looking at if you're an institutional investor. Yeah. But your perspective on the earnings season so far, and what is this telling you about the sector?
Yeah, so the sector is gathering a lot more interest. We have seen a lot of investment in the sector, foreign direct investment. Talking of some acquisitions, some M&A activity. We saw that 2-3 years back, and some last year. We have big players like Swiss Re, Alliance in the market. What we do know is that the insurance sector in Nigeria, compared to the emerging markets, compared to developed markets, you have low penetration. You still have higher profit margins, though, because of that low penetration. So it's a sector that I think people should not take their eyes away from, because if you look at the core for insurance, it borders around two motives of money. We need some reforms to come into that sector, similar reforms to what we saw in the pension industry, where we saw about 10-15 years ago, assets under management from 460 billion have grown to about 8-point-something trillion. So you do need a lot of reform to come into that sector. However, insurance premiums come from transactionary motive of money, speculatory motive of money, and precautionary motive of money. So that is a sector that I expect to definitely expand in the next 3 to 4, 5 years.
What do you think will be the big catalyst for growth? I mean, what will drive the spending, and are you seeing more of the growth on the retail side, or is it more corporate related growth?
Okay, so let's look at sectors, for instance. I can tell you, for instance, that the oil and gas segment, right, requires a lot of insurance. And all the insurance companies today, because of the balance sheet size, can basically do less than 10% of the premium. So a lot of that business is taken outside the country. So even without reforms today, there is a lot of business for insurance to pick. So a lot of capacity building has to be done, and we do know that the solvency requirement by NICOM was shelved, but I think that's something that has to come back on the table. We need to recapitalize these insurers, because if you look at the results that have come out across board, they have all recorded profits. you know, and a year-on-year increase in profits, some single digits, some double, also in market share. So you do see that in spite of the huge investment that has not come into the sector, the players that are there are still growing year on year.
Right.
So it does tell you that that sector is very
So if you're picking from that sector, what are your top choices if one wants to get invested in insurance?
Yeah, I would look for an insurer that has top 10 market share in terms of things like
So if we're picking from the sector, I want to get your perspective on the best choices, institutional, retail investor. What do you like in the sector right now?
So I like the top 5 players. We only have about 3 of them listed, and that's AXA, Mansard, NEM Insurance, and Custodian and Allied. Even though that's no more a pure insurance company, it's a lot bigger now.
Quite invested.
Mansard is also evolving into that. It
Indeed.
has a PFA, it has a health management limited, and it has a property development company. But if you look at the market share, Mansard is number 2 in terms of general insurance. It's number 3 composite. And if you look at their full year 2018 numbers, we've seen double-digit growth in top line, gross premiums written. We've seen growth in PBT. PAT did not go in tandem. PBT grew by about 5%. The drop in PAT is associated to a higher tax rate. They were taxed about 17% in 2017. It ran up to 27%, so they are getting almost there in terms of the standardized tax rate. But in terms of operations, you've also looked at on their books. When I looked through the numbers quickly, they've done a lot of reinsurance contracts that will last until 2019 full year. So it means that that's only going to be a positive to their numbers, because from top line, apart from what you reinsure, you know, to reduce the burden on your or the risk on your balance sheet, they have already done that for some business that they are going to do this year.
All right. Well, Usoro, thank you so much for the useful insight. We don't talk about insurance very often, but very useful indeed. Usoro Essien, Head of Research at Vetiva.